The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the May 1st wonderful Wednesday edition of today's opening bell on The Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today, folks. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is what it's all about. So let's go look at one of our tools. This is the tool I call only one thing is more important than learning from experience, and that is not learning from experience. You know, today can be filled with opportunities for you to express yourself, expand yourself, and experience the world around you. A lot of people talk about life, but at TFNN, we live it, and we love it. As tigers and tigresses, we realize that life can be what we make it because we have learned from past experiences. Lessons learned from our experiences, well, they help us to see the possibilities in the game of life. When we've been there and we've done that, we have experience to know where we want to go and where we don't want to go. Experience, folks, is certainly an excellent teacher. You know, there's a Chinese proverb that says this: those who play the game do not see as clearly as those who watch. So while you're playing the game of life, it's always an excellent idea to step back, take a look at what's going on, or even seek some outside opinions from those who are actually watching you. Work each day, folks. Work each day on making each day a better performance than the last one. Expand, improve, build on your experiences, and you will emerge as a winner in more ways than one. Let's go take a look at these markets. Let's go find the winners and the losers in these markets. You would think a lot has happened since we were last together, but right now the ES Mini's trading at 1589.25. You see, yesterday morning at 9 a.m. as we opened up the show here, the ES Mini was trading at 1588. Not a lot has really changed, but we'll go take a look at these markets. We'll figure it out. Let's go start off here. Let's take a look at the ES Mini 30-minute chart. So now we're digging down into the EKG of the market here. Formed a three-drive to a top pattern. You may say, Steve, what the heck is a three-drive to a top pattern? I think that's a good question, fair question, so let me point it out to you. What we're taking a look at is we're taking a look, number one, at swing points, and we're looking at expansions between swing points. The first swing point that we're going to use on this pattern out here came in at 2:30 in the afternoon, 14:30 hours on April the 25th. The high out there, 1588.25. That's considered our first drive, the drive up to that top of the peak there, that little mountain. The next day, what happened after that? What happened at 2:30 in the afternoon as the ES Mini was making a high, went ahead and pulled back. And it pulled back. It was also in that oversold or overbought territory here. Just taking a look at that simple relative strength index. What does it do? It's got to work its way off, works its way off by pulling back into a low at 12:30 in the afternoon on April the 26th. Then it makes what's considered drive number two. It works its way from that low at 12:30 out at the price of 1572.50 all the way up to the high that came in at 2:30 in the afternoon on April the 29th. That high out there was 1592.25. Just so happens when you take a look at the expansion between drive number one, the top there at 1588.25, all the way down to the low that was put in at 12:30 in the afternoon, down on that April 26th low at 1572.50, happened to be a 1.272 expansion. On these three drive patterns, you like to see nice Fibonacci numbers, 1.272, 1.618 out there. Well, we got a nice 1.272. Makes that drive up there at 2:30, and guess what happens? The market gets into that overbought condition. You get into overbought condition, and what do you got to do? You got to work that self off. You got to work it off, and that's exactly what the ES Mini did. It moves from the high of 1592.25 all the way down to the low when we were on the air yesterday at 10:30 in the morning, getting down to that 1581.25. Then what's the next move? Moves all the way up into a high little doji candle that came in here at 8 o'clock this morning. That price point, $15.95. Well, folks, if you go ahead and you take drive number 2, that would create a drive number 3, by the way. If you take a look at drive number 2, that high, 1592 and a quarter, versus the low that came in at 10:30 yesterday morning, out at 1581.25. If you took that difference, multiplied it times 1.272, added it to the bottom here at 10:30 yesterday morning, that would take you right up to that 1595.50 level. So we've got drive 1 coming in at 2:30 in the afternoon on April 25th. Drive 2 coming in at 3 o'clock, 2:30 in the afternoon on April the 29th, and Drive 3 coming in at 8 o'clock in the morning. Now, I expected Drive 3, quite frankly, to come in at about 1:30 in the afternoon in order to be able to have what you like to have is really nice symmetrical patterns here. You don't want to you don't want to really force it. And what you like to have is you like to have the same type of a time span in between each of the drives here. This one peaked a little bit early out here. Still worked. It's in play. What do we have going on? On the EKG of the ES Mini right now, the 3-drive-2 pattern has worked. Now we've got the ES Mini pulling down, but as it's pulling down, it's starting to move down into that oversold territory. Not quite down there just yet, but that is where it is headed to. Yesterday, as the market was moving down, if you were listening in on the 10:30 show, we were saying, look, this is pretty simple. Very simple. If you just take a look and you spend some time educating yourself on candlestick patterns here, the bulls and the bears, they absolutely cannot hide. They will always show themselves to you. We got a nice big bullish engulfing candle at 11 o'clock. We actually went down on the intraday chart, on a 10-minute chart. We saw that where the bulls were actually showing up for work in the workplace. And we said, here's a good place for you to enter if you were looking to go ahead and take a long position, just waiting for the bulls to show up. It's a beautiful thing, folks. 877-927-6648. Right now, the ES Mini out at 1588. Well, what's going on in these markets here? Can you believe it? One more time. Leading the charge to the downside, how can this be? We go to our Dow 30 stocks out here. You got Merck & Company, MRK is the ticker symbol. Closed last night at $47. Trading right now, last trade fired off at $44.88 out there. Could it be inside the Dow 30, we get another stock with volume off of the highs out here? Well, let's go take a look at Merck. If we take a look at Merck, that happens to be, let me see here, 1, 2, 3, 4, 5, 6. It happens to be, it looks like about number 26 in the, number 16, 12, 30, boy, I'm having a little contusion here. Looks like, about number 18, maybe number 18 waiting inside the Dow. But let's go take, where is it? That should be right here in front of me. How come I can't? So let me go over here to the earnings little tab here. I think I've got it up here on the earnings tab. So we're going to take a look at Merck because that is the one that is trading lower. We're going to see if it was also at its highs. And, how about that? It most certainly was. So we're going to have another stock today. This is going to gap down, not going to create an island reversal. Had a nice little bearish engulfing candle out here on April 24th, up at the high level, 48.79. Closed out yesterday at $47 even Steven. It's going to open down at 44.88. We take a look at where 44.88 is going to take us to. It's going to take us right into this little island top reversal that it did have back here on March the 12th. That level, it's got 56 million shares. The low is 44.88. You're trading at 44.88 right now. So we'll see what kind of volume. It may just take that out and then head all the way down for its lows post-haste, all the way back to the December 31st swing point out at the price point of 40.02. The high there is 40.97. So we're going to have another Dow stock, most likely. We'll have to see how the volume works out on this one. We'll most likely have another Dow stock with volume off of its highs out here. Is that important? Well, it is. It is that sell in May. It's sell in May. And speaking of May, we've got the Kentucky Derby right around the corner. You like the Kentucky Derby, folks, out there? I believe we've got 20 in the field out there. If you were to bet on the Kentucky Derby, what type of person are you? Would you take the underdog here? That would be Falling Sky. How is it that we could possibly be coming into the sell in May cycle And the underdog here inside the Kentucky Derby is a horse named Falling Sky. Seems kind of appropriate for maybe what some of us here are considering in the marketplace. We've seen a lot of Falling Sky when you've taken a look at a number of these Dow stocks out here. Merck today, IBM a week ago. Who was it yesterday? We had, who was it yesterday out here? Pfizer with volume off of the highs. It's all over the place. Falling Sky, the odds are 75 to 1. Maybe you wouldn't take a 75 to 1. Would you take odds of 12 out of 13? Would you bet on a horse like that? Would you consider that to be a favorite? When we come back, we'll talk about that. 877-927-6648. We'll be right back.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow futures off about 35 points right now. Gold taking it in the shorts this morning, even with King Dollar back about 25 ticks. You've got gold trading down $20 right now, about 1 3/10 off of yesterday's close. Silver down 3% this morning, off 75 cents. Platinum off a couple percent. That's down $31. Copper also getting hit off over 3% here this morning. It was over in Asia last night, only the Nikkei being open. They were down 61 points. Over in Europe, only the FTSE open here this morning. The FTSE right now is up 31 points. Now, was talking about the Kentucky Derby out there. Even if you don't bet on the horses, maybe you just enjoy watching the race out here. But we got 20 souls out there that are going to be racing. Just so happens that Falling Sky is right now is the underdog, 75-1, and would you throw a few bucks? How do you like it? Would you take, do you want to take odds of 75-1? Are you the type of person that would prefer maybe the actual favorite out here, 4-1? Verrazano, I believe, is the name of the horse out there. Or maybe you say, there's another one, Golden Sense. That's 15-2 out here. Maybe you're more of the middle of the pack. You say, I take a 10-1, or a 14-1 favorite out here. It's my lucky day. That's 14-1 out there. Well, what if I were to give you odds? How about odds? Would you be the type of person that if 12 out of 13 times it worked, that you would say, hey, those are pretty good odds out there? Well, think about it. Would you take something like that? Well, how about if I give you those odds of the last 12 out of 13 years? 12 out of 13 years, sell in May has worked. And when I say sell in May has worked, what I mean is the close of yesterday, April 30th, we saw a lower close 12 out of 13 times. Now, some of those corrections, folks, some of them were meek and mild. Many of them substantial. Take a look at 2000. That was about a 10% correction from the close in April 30th. Didn't necessarily happen to start on May 1st out there. How about in 2001? A 25% correction. 2002, a 27% correction. How about last year? 9.5%. How about the year before? 20.8%. How about the year before that? 2010, almost 14%. 1% in the year of 2009. How about 2008 out there? 39%. How about 2007? 4.5%. You kind of getting the gist out here? On the media, when they take a look at this sell in May or what have you, and they're talking about, they're reading from a gosh darn prompter out there. They're not really providing the information. Go out there, do the work, go take a look at it, folks, or just go test drive my newsletter service. So much information that is contained in there that you'll be able to use for your trading out here. But, and these are just simply the last 12 out of 13 years we have seen during this 6-month seasonal cycle a move lower than the close of yesterday. And if you knew that, how is it that you would actually go ahead and trade? Well, I don't have the answer to that, but you've got to come up with the answer. Had a question from a listener here. That was, I had showed this chart here. This is the chart of the Bradley model. I don't recall if it was yesterday or the day before, but what I got up on my screen here right now, if you are watching us on Tiger TV, is the Bradley model. It's the Dow Jones with the Bradley model overlaid on top of this. Now, It's a great model out here. It's really used more from a trending standpoint, and so I want to make sure that this is really clear. When you take a look at this, now what I have done is I have adjusted the Bradley model here. I've adjusted this by pushing it back by about 3 weeks, and I've done that just simply to try to identify where the Bradley model is actually lining up with the market right now. And what this says here, this says that we should see a peak sometime between yesterday and maybe it's May 8th right now. Maybe it's May 9th, 6th, something right around here. So this says, and this is not to be used on the exact turn date or what have you. This shows that a significant high could be put in place here. But the way that you really use this red line, this Bradley model line, if the market does turn down, if we don't defy the odds, which could be done. The favorite could absolutely come in the Kentucky Derby. Falling Sky could most certainly win at 75-1. And just because out of the last 12 out of 13 years, we've seen a lower close inside the S&P 500, inside the Dow between now and October 31st, doesn't mean that it's going to happen again, but it most certainly could. Just because the red line's going down, all that means that the market is suggesting a correction. You can't take a look at the depth of how this red line moves down, this Bradley model, and try to go ahead and tie that to price. It's just a directional indicator. 877-927-6648. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing TigerTV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow off 54 points, trading out at 14,785. S&P down about 5, trade at 1593. Composite down 1.5, trade at 3327. Russell 2000 down about almost 3 points, trade at 944 in change. Google off $3, Apple up $1.15, Microsoft down 14 ticks, Intel off 2, Cisco down 6 pennies. Leading the charge to the upside is the ultra short on silver. That is the ZSL. That's up about 7%. SourceFire, FIRE is the ticker symbol. Equity-wise, they are the leader in the clubhouse, up about 9.5%. That's up $4.54. They did have a loss in revenue of $56.2 versus $46.3 million from the prior year out there. And let's see here, a loss of $267,000 versus a profit of the prior year of $67,000. Right behind them, you've got Trulia Inc. TRLA. They're up 14% this morning. They did had a loss of 7 cents a share versus 61 cents from the prior year. Revenues of $24 million versus $12 million. So they are moving and grooving. Humana is right behind them, up $3 and change. That's up 4%. Humana also out with revenues here. Their revenues look like they go net income $473 million versus $248 from the prior year. So not too bad to be in the health services out here. However, really how they did it was by cutting costs, because revenues $10.5 billion versus $10.22. Excuse me. To the downside, MasterCard off $14 right now. That's off 2.5%. Regal Beloit, RBC is getting just hammered. They are down $14. That's off 17%. T-Mobile, TMUS, truly getting the kibosh, down 31% off $7.5. SP is in Paul, X Corp. SPW is a ticker symbol. They're off 7%. Solar Winds, SWI, off 7%. Fiserv down about 4%. IPG Photonics off 5% as well. Let's go to our first caller. Let's go all the way out to St. Louis to Larry. Larry, thanks for calling. Thanks for holding. How are you this morning?
I'm doing great, thanks. Hey, I just had a quick second here. I was going to ask you just if I could get your opinion on the euro.
What's your time frame that you're looking at? Are you long, short? Tell me what you're doing and how I can help.
Looking to go short on it at most 30 days, probably 3 weeks.
Okay, so we take a look at the euro here. Let's first start off by taking a look at the daily chart out here. The euro has broken above a resistance area, and that is the level of the high from April the 17th and April the 16th out there. So 1.32 even, Steven. Right now you're 132. About 132.11 out here. So it is breaking above a resistance level, and if it stays above this price area here of 132, then it could easily move up to the 618 level, which would be 133.41. So that is a possibility out here. If you just take a look at A to B equals CD patterns out here, your A point would be the low that came in on April the 5th. Your B point is what we're using right now as a little bit of a resistance area. We'll see if that becomes support here or if the euro gets back inside there. This is a daily chart that we're first looking at, Larry. Daily chart is neither overbought nor oversold here, so it has room to run in whichever direction it chooses. Has room certainly to run to the upside. The 1-to-1 A to B equals CD takes you to 134.09 out there. Now if we go down and we take a look at a more of an intraday chart here, we'll see that the euro truly got that rubber band stretched. That rubber band stretched as it was making a high at 9 o'clock this morning, and it was as it was doing that truly in the very overbought condition. And all that means at this stage is that just simply needs to be worked off. And that's what it is that we've seen take place here just over the course of really the last, half hour or so inside the marketplace, inside the euro. So it has not completely cracked here on the intraday chart. It did have higher relative strength as it was making its high than the last high that's out there. So that's a bit of a bullish sign on the euro. I can't tell you, fundamentally, I can't figure it out, but take a look at the stock chart. I most certainly can tell you what it is doing out here. And there's on the intraday chart, I like to just understand momentum of anything that you're trading, currency, equity, commodity, and that's just simply I'm using 4 different exponential moving averages out here, and right now, the way that these moving averages are aligned, there's no breakdown here in the euro. All that the euro is doing right now is just simply pulling back and working off on the intraday chart some of this overbought condition out here. So, if you wanted to take a short here, and I'm not suggesting it, but if you were going to take a short here, you'd want to have your stop somewhere over the high that came in at 8:30 this morning. And what you could do is you could take a look at, if we take a look at just simply expansion patterns, because in essence that's really what's going on here, and we could take a look at the swing point on the 30-minute chart. That would be the swing point that came in right around 3 o'clock in the afternoon, right around the 1.3200 level. From that high all the way down to the low that was put in at 5 a.m., and when it got down to 1.297, since you're already up over the 100% move of a move, which is that swing point high back on April 16th, easily could make its way up to the 1.272 level. So if you were going to go short here, you would want to make sure that your stop, and this would be taking maybe too much heat here, would be above that 1.272. That would be just a natural expansion to move its way up to 1.327 out there. So, the moving averages here, they're not showing me any kind of breakdown. You expect it to pull back here right now just simply because it's over bought, and I'd want to see the lagging indicators here. I'd at least want to see it get back inside the range. So on the 30-minute chart, you want to see it get back below that 1.3200 level. Then maybe you could go ahead and take a look at a short there too.
Okay, very good.
Does that help, or tell me what you're looking at as well, and I'll take a and are you looking at what on a chart or something? Are you looking at some other pattern?
I'm kind of just putting some things together right now on it.
Yeah. Okay.
So, but what you told me is a huge help. If I have anything else, I'll give you a call back.
Okay, yeah. Watch for it. If it gets back in the lower part of the range, then what it did on the 100% move here just simply was a false break topside, and that's maybe what we're going to see here inside the markets today. So, fundamentally, I can't tell you why the euro is moving higher, but it is, and so just trade the chart.
Okay, I really
Larry?
appreciate your help. Thank you so much.
Hey, my pleasure. Thanks for listening. Thanks for calling. That was Larry in good old St. Louis out here. Let's go take a look at some of these stocks that are popping and dropping in the marketplace. Let's go back over into the Dow. Let's go see what Merck is doing here. Take a look at the volume. So Merck gapping down this morning. MRK is the ticker symbol. It's got volume behind the move. 7 million shares in only 12 minutes of trading. It made a high with 15 million shares back on April 24th, just half a dozen trading sessions to go. It is also trading right around that last high volume bar out here, that little island reversal candle that ended up not holding for more than maybe about 2 weeks out here. That was the trading session from March the 12th. That is 56 million shares out here. So we'll see if those bulls are still going to go ahead and buy up a Merck out there That's one of the reasons why when you are trading any kind of equity here where you've got good volume here is you always want to be able to pull it back and see where those volume bars are out here. And the reason is because when something falls out of bed, where it's going to first go to, that volume bar. And the Merck is just a great example of this, because you've got that high volume that was just sticking out here on March the 12th. If you were inside this equity, if we take a look at it as it got over its most recent swing point high here, just see if there are any problems other than the candle formations. You would look at October the 18th. Did about 11 million shares, 13 million shares on October the 19th. And as price got over that area, it was 17 million shares. So it got up over a swing point with volume. So that was looking pretty good. The day that it backed off was with 15 million shares. You don't necessarily like to see it go up on 15 or up on 17 and back on 15, but still not too much of a breakdown. And if you're in this equity, you would know that you should have some friends right out here at that high volume bar at March the 12th. The problem becomes if this level starts to fail. What I mean by that would be a close below 44.88. All of a sudden, maybe you don't have any of your friends, the bulls out here inside Merck. So watch the price point to be watching here is below 44.88 because it's got volume in it. So we've got volume off of those highs out here. And as this is falling from the sky, we'll see if this level will hold. If it does not, it'll move all the way back down into that December 31st swing point level. That price is right around the $40.02 mark. That is Merck. If it doesn't hold there, you can take a look at these nice high volume bars all the way back to June of 2012 in the $38 level. Let's go take a look at some of these other equities here, popping and dropping. Let's go take a look at RBC. Let's put that stock chart up, down 17% this morning. They are the leader in the clubhouse. RBC is the ticker symbol, and it's Regal Beloit. Off $13 with volume. Oh, my goodness. So let's go see where this is moving down to. So we talk about know where your high volume bars are. Well, in the case of Regal Beloit, RBC, that would have taken you back to December 13th, 2012. Nice volume. Now, nice volume in comparison to the other days. 1.9 million shares out there. As this gaps down this morning, this is now a confirmed A to B equals CD down, and it's below that high volume bar out here. Right now, it's done 600,000 shares in 15 minutes worth of trading. That was taking out your B point now of an A to B equals CD down. That was at April 17th's low, 72.53. So as we go take a look at this A to B equals CD, then we'll go ahead and pull this stock chart back a little bit further, and we'll see the next volume bar. You can see already today gapping down in the 1-to-1 level, but that says it's got lower prices when you gap into your D point. And that's a bad thing. And when you take a look at that descent off of the high out here, the A to B, that was a pretty steep curve. And to maintain that curve would say that's pretty impressive. In this case here, unfortunately, pretty impressive to the downside. When you do what this just did, this is a steeper curve on this gap down than that A to B leg. That is telling you this is going to come all the way back down here. It's not a volume area, but this will come all the way back to June 4th of 2012 out of the 56.20-ish mark out here. No volume to support it, but just a normal move. Okay, here's the volume now inside this equity as we pull this back even further. So this thing had a nice breakout level, nice breakout area. Talk about coming back to breakouts. February 7, 2012, 2 million shares. Now, not a lot of shares in comparison to maybe other things that you might trade out here, but for this equity, that was some big volume. So let's go ahead and pull this back here and take a look at what this equity did coming back into the breakout. So this thing here moves higher, wide price spread, accelerated volume, February 7th. That's the 2 million share. Now, when you take a look at a breakout, you're trying to identify where did this thing break out to. Go to your volume bars and really come back to where you've got basically the lightest volume out here. And in this case here, the lightest volume really prior to the breakout would take you back into January 27th, January 30th out there. And if you take a look at this, and we'll go ahead and we'll use the January 27th level. I'll go ahead and put a black line across my screen. So price came back into that breakout level. And now your benchmark here, the most conservative benchmark, you would use that low volume bar. But that's really, that's if you see volume down there, then okay, there are no more sellers on the break on the pullback out here. And what this equity actually did, because you're really more benchmarking volumes more like 530,000 shares or 890,000 shares or 2 million shares out here. And this thing here, if we go back to the lightest volume day, you're at 200,000, 398. You'd use like 398. This comes back with 470, and then you get that nice bullish, this little gap up here on the trading session of June the 6th. And what it does, your target here on this equity would have been that 100% move of a move. That was just simply coming all the way back here to the May 1st, 2012 high. Because that was your previous swing point. That had 300,000 shares, and as this equity made its way up there, did it with 311,000 shares, backed off a bit before it moved higher. So that is on RBC, but RBC right now is coming back into that session where you had all the way back in February 7, 2012. So it is taking back those gains. It's done that, made a high out here March 21st. And so what's today's May 1st out here. So in a period of 6 weeks, it's come all the way back to where it really broke out with volume in February of 2012 out there. Let's go take a look at MasterCard. They were also out with earnings. That's an important. Let's go see what the volume characteristic looks like on MasterCard out here. MA is the ticker symbol. Right now it's down only $9 and change out here, so does not appear to be any substantial damage inside MasterCard. So far, volume is 250,000 shares. Yesterday made a high with 800,000 shares, so pretty decent volume, but this thing is not selling off. Of course, here's the high volume bar out here. That high volume bar is January 31st, and the top of that is 535, and there's 2 million shares, and that is the area that seems to be holding up MasterCard at the moment. Right now, we've got the Dow is off 48, S&P is down 5. We'll be right back, folks.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, Then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's off 46 right now. S&P is off 5. Let's go take a look into the commodities sector here, see what is going on. We'll start off with light sweet crude. Right now, light sweet crude is off $2.40, about 2.5%. Now, I've got the weekly chart on my screen out here. The weekly chart, if we take a look at coming all the way back to the highs that were put in back here in 2008, we can see I've got a little descending price channel out here. You can take a look at coming off of those highs. I'm using the body. I'm using the close of July 11, 2008. That close 145.08. Of course, it doesn't seem so bad with light sweet crude trading at $91 right now versus that 145 mark. But what you can see here, and what is kind of interesting, is the top of this channel line, trend line, has held as a significant area of resistance. And it seemed like after last week's bullish candle out here, that what we would see in light sweet crude this week would be a test of the top of that trend line. And that has not occurred. Of course, we're only halfway through the trading, so not even halfway through. It's only early Wednesday morning out here. But it is interesting that on this move up here, light sweet crude was not able to at least get up and test that resistance level. That's on the weekly basis out here. If we come back and we take a look at the daily chart for light sweet crude, let's pull this up here. You can see how this is coming off of the highs out here. If we're going to take a look at just a normal retracement in light sweet crude now off of, and it made basically a 0.786 retracement off of the low, off of the high to low. And what I'm referring to is the high on April 1st. That level was 97.80. There was a low that was put in on April the 18th. That area was 85.61. If you just use your retracement ruler, $95.19 would have been your 0.786 retracement level. Actually got up to 94.69, so about 40, 50 cents shy of that number. Now the pullback you can see here, or you should be able to see if you're watching us on Tiger TV. Let me get rid of that right there. What we can see is it's already sliced through that 0.382 level, which was 91.22. That's now coming off of the low from April 18th to the high that was put in here 2 trading sessions ago at 94.69. So looks like light sweet crude probably will come back into the swing point here on April the 18th. That's its mark right now, headed for 88.51. Just slightly above that is the 0.618 level at about $89.08. That is on light sweet crude. Let's go take a look at Goldilocks here. Gold trading off $21 right now. If ever I thought gold might move, it would have been today with the euro being up and with the king being back a bit. But that's not the case here. What we can see here in gold made that 0.618 retracement, and that was done on April the 26th. The number to hit was 1487.50. What it actually got up to was 1484.80 out there. Now we're seeing some bearish action here. Volume-wise so far, 73,000 contracts, so not too bad on the pullback. As far as where this would pull back to, well, I think that's pretty easy to figure out. That would be coming back and testing the lows from April 16th. So that would be either the 1404.20 all the way down to 1321.50. And that's what you're looking for now after this move that gold has had. Now you want to see how gold pulls back into that April 16th level, that April 16th swing point. Of course, it's probably silver that will give us the information that we're looking for as we switch over to high-ho silver out here. We'll do that real quickly. Silver already inside that swing point. So silver was weak, wasn't able to get out of the gate here, and so silver is trading inside April 16th. We'll see what happens as silver gets down to the $22 mark. That's the April 16th low out there. Folks, it is Wonderful Wednesday. Drop to start your day. Have a great day. Always remember, you have an amazing power within yourself. And that power is so strong, it'll create a life of abundance, cure incurable diseases, build billion-dollar businesses, paint magnificent masterpieces, but most of all, create fantastic, loving families. Thanks so much for being a part of the TFNN family, folks. Have a great day.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.